Hello, good people, and today I'll be showing you how you can shield your wealth and potentially reduce your tax rate to 0%. Now let's dive right into it with the tried and trusted method of an irrevocable offshore trust. Now the reason why we always recommend our clients to go offshore and not build something domestically is because no foreign country will automatically enforce your tax authorities' judgments. It's as simple as that. More importantly, when it comes to trust, the reason why they're the best vehicles when it comes to anonymity and shielding your wealth is because none of the documents are public. They're all privately held by the trustee, and your country actually has to go through a lot of hoops in order to even be able to see them. Now, this is a regular trust setup where you have the settlor or grantor in some countries, that's you. You have a trustee who's going to manage your assets, and you have a protector. This is extremely important for any trust. It's somebody you know very well, a close confidant or a friend, who will basically have the checks and balances on the trustee and make sure that everything that the trustee does is okayed by you. Now, usually you want to have a friend and you don't want to put yourself, even though it's possible, because courts can then say, oh, you're the protector who has the right to remove trustees. Well, I want you to remove the trustee and appoint somebody that is very favorable to the court. And you don't want that. So you want to keep that barrier between yourself and those assets. And then finally, of course, you have the beneficiaries, where the trust was set up in the benefit of them. When we set up offshore trusts, we make sure that our clients have also an offshore LLC that they are the manager of. And this is an extremely important part of the puzzle. The reason why is you want nothing to be in your name on paper, but you want to control the steering wheel. You want to control everything and not even trust your trustee. And that's why you want to have an offshore holding company or an LLC that will manage all of the bank accounts, all of the money, and the beauty is, who's the owner? It's the trust. But who's the one who controls it? You as the manager of the LLC. Now, as great as a trust is when it comes to shielding your wealth, one of the common misconceptions that people have is, oh, I'm just going to open up a bank account and a trust in Panama or the Cayman Islands, and I won't have to pay any taxes to my home country. Unfortunately, it doesn't work as simply as that, because in most developed countries, they have something called the CFC, or Controlled Foreign Corporation Rules. The name varies, but essentially what it means is if you're a citizen of the United Kingdom and you open any company in Panama or Jersey and you're owning more than 50% of the shares, guess what? It's considered a controlled foreign corporation and you'll be paying UK taxes on it. So what you want to do is find a way how to sever that chain between yourself and your assets and allow yourself to use those very favorable tax jurisdictions. Now, I'll be showing you two methods. One, which works very well for US individuals because the IRS has specific rules where Americans are taxed wherever they are. It's also designed for wealthy people because it's flexible and location independent. But the second option is one that will cost you a fraction of that, and it can be used by any citizen who is not a US citizen. So this is a complex trust structure, and let me break it down to you. So in the bottom hand, you have the domestic company. That's your current business. What you want to do is restructure it where 2% is owned by you, so you keep like a managerial stake, but 98% of it is controlled by a trust, so that severs the chain between you and your assets. Now, as previously discussed, all trusts have a beneficiary, which can be your kids, but in this case, we'll have another trust as a beneficiary, a family trust. The reason why you have to keep them separate is because courts constantly look at substance over form and intent over purpose. And what that means is that a business trust does everything from your business activities. A family trust is where you can keep your primary residence. Then the final one, the charity trust, is where you're going to give your wealth away to charity. Now, you've heard stories about billionaires with their giving pledges, giving all of their wealth away to private foundations. And this is because charitable contributions in all developed countries are tax exempt, 100% tax write-offs. Now, obviously, what they don't tell you is the private foundation is in their own name. And this is completely legal. What the private foundation now can do with the assets in it is it can give out loans. And it will give out those loans to the initial company. As long as there is a duration and an interest rate, a loan is perfectly valid. So what most of these billionaires are going to do is they're going to give out a 10-year loan, say at a very low interest rate, but all of the interest is payable in year 9. Now, year 9 comes around and you say, oh, will they pay the debt? Nope. Just roll over the loan again for another 10 years. And do this in perpetuity. And because debt isn't taxed in any developed country, yours included, they can make sure that they are tax-free for all of their lives. Now, as great as a kinetic trust or a complex trust is, after all, it's flexible, it is location independent, where it doesn't matter whether you reside in a high-tax jurisdiction, the biggest problem is its cost. After all, it was a tool made by billionaires for billionaires. And in order for you to build those 3 trusts as well as a private foundation, it's going to cost you upwards of $200,000. And that's not even including the accounting or the lawyer fees, which happen year after year. So unless you're a US citizen, there's a far cheaper and simpler option for you. And that goes back to our initial example of the offshore trust. The biggest problem that we had was that because you're a resident and a taxpayer in a different country that has CFC, Controlled Foreign Corporation rules, you cannot take advantage of these 0% taxed jurisdictions. But what if there was a way to sever that link between your home country and your wealth? And that's why we use Northern Cyprus, a non-recognized country, not only for private banking, but also to establish a new residency, where you can show a residency document to your home country, whether it be in the UK or Canada, and you can tell them that you're no longer paying taxes there, but in a different place. Also, in the future, if you're going to be establishing offshore companies or offshore trusts, those foreign jurisdictions do not have to disclose your information to your current residency. With our help, you will be able to establish your own Northern Cypriot free zone company, which is 0% taxed, and the director, that would be you, is able to apply for Northern Cypriot residency. The free zone company will also be a great vehicle for you to start moving your wealth offshore and not have to disclose it to your local governments. If that sounds like something you need right now, you can go to assetprotectionadvisors.com and book a free 30-minute call where we can understand better how to serve you best. You can watch the previous videos to learn more about Northern Cyprus and how to shield your wealth. If you want more asset protection strategies that can help you and your business, then you can subscribe to this channel and give this video a like. In any case, I'll be seeing you soon. Bye-bye.